Hello, and welcome to the September market update from Commonwealth Financial Network. My name is Brad McMillan. I'm Commonwealth's Chief Investment Officer. We had another good month here in the U.S. Stock market was up across the board. All three major indices did well. Unfortunately, abroad, the news wasn't as good as the major indices were down. And of course, as always, the question is why, and what does this mean for the future? Well, the why is actually pretty simple. It's the fundamentals. It always is. Here in the U.S., the economy continues to grow. In fact, we saw growth revised up for last quarter. We continue to see hiring grow. We actually saw consumer confidence tick up to a 20-year high. People are making money. People are spending money. In other words, the economy is actually doing really well. And that's actually translating to corporate profits as well. When you look, for example, at corporate profits, 80% of companies beat expectations. That's well above what we normally see and indicates that as confident as analysts have been, companies are actually doing better. In fact, when you look at profit growth, it's up at 25%, which is at the highest level since 2010 when companies were bouncing back from the crisis. This is an extraordinary level of corporate performance, just very, very strong. And really, it's small wonder that companies are doing well and their stocks are doing well. Unfortunately, of course, as I said, the news abroad isn't as good. When you look at the fundamentals abroad, we see growth is slowing, and that's a problem. But a bigger problem is what the effect that U.S. policy is having on foreign countries. Certainly, trade is a major issue. That's becoming an issue with Turkey, for example, and there were concerns that that crisis was going to spread. Argentina is being rattled. Brazil is being rattled. So this is something that is affecting the whole world. And it's something that could spread, but at the moment doesn't seem likely to. The other problem is the strong dollar, which is also affecting all of the countries I've mentioned and others as well. Because many of these countries borrowed a lot in dollars, and now they're having to pay it back in significantly more expensive dollars. The fundamentals are weakening, and again, it's no surprise that shows up in the financial markets. So despite the good news, there are risks out there. Here in the U.S., another pending risk we have to be aware of is the elections. Midterm election season starts pretty much immediately after Labor Day, and that's historically a cause of volatility. That's not a surprise because September is historically the most volatile month there is. So in other words, we've got good reasons to believe we might be heading into some volatility. But the good news is this. If we do see volatility with the strong fundamentals, this is exactly the time we want to be able to weather it. So this is something we can keep an eye on. This is something we can expect. But this isn't something that necessarily is going to rattle us too much. What's actually going to happen? Well, we'll have to wait and see. But know this, the fundamentals remain good, and despite whatever might happen, that's going to cushion us, and that should carry us forward. I'll talk to you next month. Thanks for watching.